So we'll use our friend's example here. He's buying property for £600,000. Sorry?
That one didn't have VAT. I had another one with me.
That was the one you bought. This is the one you're gonna buy. This is the next one. Okay? So 620, and he's gonna pay £120,000 for VAT. Everybody agreed? 20%? So 720. Is he paying stamp duty land tax on this figure here or this figure here?
Total.
Total, yeah? So if he doesn't pay VAT, is he paying SDLT on 600 or 720? 600. Yeah? So the benefit of 𝐡𝐞 for you is you save on the SDLT element, yeah? And then you don't have to raise the funds, you don't have to go to HMRC to get the money back, because they can be a pain in the backside. Do you have a question?
Can you just clarify the tenancy? Is it 3 months beforehand?
They should be in the property for 3 months after you complete.
After?
Yeah. Yeah. That's not a rule per se, but there's got to be some level of occupancy. I think 3 months is sufficient. Yeah? You pay no VAT, but you have to register for VAT. So going forward, you have your own VAT number, and then you charge the tenant VAT. When you sell the property at some point in the future, you must charge VAT on the disposal. Okay? So it doesn't get you out of the scope of VAT. It gets you outside of paying the VAT on the purchase and all the costs associated with it and the SDLT. Everybody with me so far? Yeah?
Let's say when you dispose the property, can you still treat it with the transfer and ongoing concern with the new?
If they have a tenant, yeah. If you have a tenant in there, yeah, that's fine. Okay. Your other option is, if you're going to convert it from commercial to residential, you can use something called a VAT 1614D if the seller wants to accept it, which basically is an intention for you to convert from commercial to residential. And if the seller accepts the VAT 1614D, you don't pay VAT on the transaction. You pay 600 grand. So what you ought to do when you're looking to buy the property is find out about the VAT situation. When you make the offer, say, I'm going to convert from commercial to residential. Can you accept the VAT 1614D? I'm going to buy your commercial property. I want to enter into a negotiation with you about the capital allowances. So when the heads of terms are drawn up, if you're going through an agent, okay, then those things should be in there so that there's no misunderstanding. Okay? VAT, capital allowances. Everybody with me so far? Clear? Good. Now we're going to talk about our friends' capital allowances here. So capital allowances, in very simple terms, in this room here, what do you think are some of the things that may qualify for capital allowances? Radiators, aircon. Do you want to guess? Lights. There you go. You've had that hand.
Machineries.
Yeah, plant, machinery, equipment. Yeah, the flooring. Anything which you can remove from the property, which isn't an inherent part of the property, which pretty much is anything that's fixed inside any room. Yeah. Lifts, staircases, that kind of stuff. Okay. Elevators, escalators, whatever. All those things. Fire alarms, smokes, cameras. Well, there's a whole load of things. Sorry?
Windows are not part of the building.
Windows are part of the building, yeah. They're an inherent part of the building, yeah. Yeah. If you take the windows out, you have a problem. Yeah. So our friend over here had 300 grand in capital allowances. What happens is these capital allowances have different pools. We're not going to go into the pools because it gets very complicated, and obviously you'll recall that we spent an hour or so going through that on the 2-day course. But depending on which pool your capital allowance falls into, you can claim a certain amount every year. We're going to assume it's the general pool. In the general pool, you can write off 18% every single year. Yeah? Okay, so 18% of this can be written off every single year for capital allowances for our friend over here. But it gets better, because when he buys a property, he's got old capital allowances which are in the building. If he then refurbishes the property, let's say once he's bought it, he decides, like you may do, that you're going to do commercial service accommodation, he spends some more money in the property, and works out that he spent another £300,000, which qualifies for capital allowances on the new bit, yeah? So in total he's got 600 grand. What our friend here can do is claim the new £300,000 all in one go. And this here at 18%. So how much profit do you say you're making from 25 grand?
Yeah.
So he's making £25,000 profit. Let's call it 50 grand. Because you've changed to service accommodation now, okay? So you're making 50 grand. Making 50 grand. In his first year, remember, he's got old capital allowances and new capital allowances. The new capital allowance, he's got £300,000. He can claim that all in one go. So not 18%, under something called the annual investment allowance. That is up to £1 million in any 1 year, which ends on the 31st of March 2023. After that, it goes down to £200,000. But even £200,000 is quite significant. So our friend over here, in his accounts, he's made 50 grand profit. On his tax return, he's made 50 grand profit, less £300,000 loss. So he's created a 250 grand loss. He then carries this loss forward for tax purposes only, okay? And then next year makes 50 grand profit, okay? So he's got 200 grand left, 200, so on and so forth. It'll take him 6 years at £50,000 to use up these new capital allowances without paying a single penny in tax. Everybody with me so far? Can you now see the benefit of claiming capital allowances? And remember, he then has, after in year 7 onwards, he's then got 18% at 300,000. So that's going to significantly reduce his tax as well, to probably from 50 grand. I think 18% going to give us something like 50 odd grand here. So he's going to pay no tax in year 7 either. So he's going to use, so once he's used up 18% of 300,000, whatever's left over, he's got 18% of that. Okay, so this will take him about 16 years to use up. Does everybody follow that so far? You bought the property for 600 grand, yeah? You claim 300 grand in capital allowances, which is items, fixtures, fittings, plant, machinery, equipment in the building, yeah? So it's costing you, the building's net costing you 300 grand. Everybody agree with me? Yeah? Okay, so that's your net cost, because you've claimed this against your profits in the first 6 years, let's just say, okay? Or however long you take, okay? In profits. Let's say in year 15, you sell the property for £1 million. Are you going to pay tax on the million less the 600 grand, or the million less the 300 grand? Because remember, you've got to use up this 300 grand against your profits. Do you have a guess?
300.
So you're saying million less 300 grand. Does anybody think it's 600 grand, by the way? Put your hand up. Have we got a couple of people over there and over here? Why do you think it's 600 grand?
Because that's the original purchase price.
Yeah. Okay. So you've got a double benefit here. You're going to claim the capital allowances, but your purchase price, like our friend says here, always remains whatever it is per the completion statement. Yeah? So based on whatever the tax rates are, so let's say if you were paying 25% corporation tax, you're going to save 25% of tax on that, yeah? The physical tax saving, yeah? Which is £75,000. But even though you use that up, you're still going to use it here again. You'll have further saving because your purchase price remains the same. Yeah? So you get 2 for the price of 1, basically. Yeah? So you must make sure you don't miss out on capital allowances. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.